Saturday, August the 6th, 2011, and this will be investment classes by the numbers. And the classes that I'm going to take a look at contain gold, silver, copper, palladium, platinum, oil, the Dow Jones, the NASDAQ. The XLF is an ETF for the financial institution. Cotton, IYR, that is the real estate ETF, and the Dow Jones Transports. I'll explain what each of these numbers are. Some of them don't need much explaining with the current price. That doesn't need explaining. This is the highest point that the following investment was at during its 2007 2008 recession highs. This percentage represents how well the market has done within their lows and the highs. When it's over 100%, that means the market has been making new highs. So gold has made new highs from the 1029 March highs. Silver has also made new highs. Copper is pretty much at its highs from 2008. Palladium has made new highs. Platinum, 74%, not quite yet. Oil, 2/3 of the way, not quite. Dow Jones isn't there. The NASDAQ is closer, but no. The XLF has only managed to get half of its losses back. Cotton, it's above it, barely. IYR, same thing in the transports. Now the low represents the low that it made in 2008 or 2009. And the Fibonacci to the right of it represents how much it has retraced from the major low and its current high. Within these numbers, if it is over 76.4%, then this is bullish. You can almost take a look at this like a stochastic study. The numbers work out exactly the same. If it's over 80, it's good to go. Below 20, the opposite. So gold is extremely bullish. When it's at 97.9, it is really on the way up. And the only way that can be is if you're near your high. Silver, 85.3% is actually a significant Fibonacci number. Therefore, this number tells us that silver is on an extremely bullish scenario. Copper is the next one after that, 90.9. Palladium's doing well, and so is platinum. All the metals seem to be doing okay. And oil, well, it's bullish. Very bullish, actually, yes. And the Dow Jones from that point is also bullish, as is the NASDAQ. And, well, the financials are barely bullish. Cotton, not so much, because it's lost a lot. IYR, the transports, and this percentage tells you how much it's up since its low. So gold is up 138%, silver is up 353%, done better than anything of this group. Copper is up 200+%. Palladium's up 300. Well, palladium's done better than silver, barely. Platinum's done over 100%. Oil is done over 100%. The Dow and the S&P is close. It hasn't done so well. In fact, the NASDAQ's done 100%. The XLF Financial's up over 100. We can see clearly that the metals have trumped them all. As far as the current year is concerned, we're going to go into the Fibonacci of the current year. And for gold, it's at 92.5%. And silver's at 59. In fact, you got all of these here that are low because, quite frankly, a lot of them are making new lows right now. And so far, from the yearly lows, this is how much each of them are up. And it's guaranteed that you cannot be at a negative number. Because if you're making new lows, then you'll be making different numbers that will state, okay, well, we were at a low of, say, 11,400. Then we just went down to 11,300, 11,139, and, well, we're up 2.7% from their low. So a lot of times when you see these low numbers, this tells you on Friday how much it bounced from their lows. Yeah, gold and silver are still hanging in there because silver's low is 26.30 for the year. So it's been capitulating down, or it's been going down twice. It did it in May and it did it just recently, and yet it's still staying above its low of $26.30, while almost everything else is making new lows for the year. Now, last summer, the markets for almost everything also found a significant bottom. Gold found a bottom at 1044.5, so within the Fibonacci scale, the only things that are doing extremely well, which would be over the 73.6, are doing well. Gold, silver, copper, palladium. That's it. And as far as gains are concerned, gold's up 58% from its lows last year. Silver's up 160, and you can see the rest of them within here. The millennium lows. Gold, the millennium lows was 252. Now copper, I'm just taking a wild stab at it at 75 cents. I don't know for sure. But since those millennium lows, gold has retraced 99%. So when you see these, basically this tells you the difference from 100 to this tells you what they've given back. So from the $252 lows back at the start of the millennium and the highs a few days ago, it's given back 1% of it. From the lows of $3.97 to the highs of $50, silver's given back a little over 10% of its gain. Yet, the metals, again, we can see within these metals here that they're well all over 80. Most of them are over 90. And only one is above 80% on this list. That's the transports at 83.1%. As far as the gains are concerned of the non-metals, the best one here is cotton, 171.6%. And the worst of these five is platinum at 343%. And another note to mention is we're looking at the Dow Jones right now at 11,444, which is pretty close to where it was this time 3 years ago. And this time 3 years ago, oil, well, it's at 87, not much of a difference, and silver's at 38. Back then, silver was about 14. So this is showing silver and gold are holding their own, as well as a lot of other precious metals. For if we do have further capitulation, where the stock market goes down to 8,000 again, then maybe silver might go from 38 to 20 something. Gold from 1,600 to maybe 1,400 and something. And then when everything else goes back up again, silver and gold seem to be doing fine. But as far as the numbers go, they are showing gold and silver are holding up very well. Thank you for watching.